Thank you. And a very good afternoon. It's always a daunting task, right? We got the graveyard shift as the last panel of the whole entire ASEAN-Indo-Pacific Forum series of events the last 2 days. But we'll try to make this very interesting and very insightful for you still. Just a quick context. We're going to talk about sustainable and innovative financing. And I think at the heart of it, really, and you can see actually the distinguished speakers that we have over here, are really the subject matter experts. We know how important sustainability is for ASEAN. There's significant opportunities for investment, but the point is that there's a significant financial gap. On the climate alone, by 2030, ASEAN would need an estimated amount of about close to $10 trillion just to meet the trajectory, to meet the Paris Agreement. And that is something actually that it's very daunting, actually. How do we bridge that capital? How do we create the right structure? Many of the projects may not necessarily be 100% commercially viable. So being very creative, innovative in the financing is the key. And that's what we're going to talk about today. So without further ado, just wanted actually to briefly introduce some of our esteemed speakers. We got Pak Rida on my next. Wirakusuma, I think actually no need for an introduction, chairman of the Indonesian First Sovereign Wealth Fund, actually INA. Rida is an experienced banker, whom I know personally as well, actually across many respects. He's a veteran and a senior in the banking industry as well before joining INA. And we got Alice Carr, fresh from London. Alice spent 20 years in the central bank, actually working on projects with Bank of England across the globe, and is the executive director of GFANZ. As you may have heard, GFANZ is the Glasgow Financial Alliance for Net Zero, actually, who's been a key sort of a contributor in the Just Energy Transition Partnership programs across the world. We got Justin Wu, the head of climate change for HSBC, joining HSBC from Bloomberg NEF. So obviously a subject matter expert on the climate and sustainability side. Pak Jiro Tominaga, who's very well known in Indonesia, the country director for ADB. Again, ADB plays a very critical part in accelerating that innovative financing across the sustainability part, not just on the climate, but also on the social element as well. And last but not least is Kun Nadawan. Kun Nadawan is the head of the corporate banking for Bangkok Bank. And you can see Bangkok Bank has been expanding significantly across the region. And we'll talk more on that, actually. But I'll start, actually, with the first question, if I may, actually, to Pak Jiro. So, Pak Jiro, how do you see this prospect of sustainable and innovative financing in ASEAN and maybe actually Indo-Pacific at large, since we are in the ASEAN-Indo-Pacific Forum? Why are these type of financing are important and critical for businesses to grow and generate positive impact, either for the climate or environment, as well as social?
Thank you. Thank you very much for the question, first of all. And then I also want to thank the organizer for inviting me for this, to join this very distinguished panel. I think the question is quite sort of high level in a sense that it sort of put the kind of the stage for the discussion, I guess. So let me just try to approach it in a little bit from various ways. First, I think it is just apparent that the climate change and then also the social issue is really a big issue that we need to deal with. It is really the defining issues for us for our generation to solve. And then it is particularly important for the Asia-Pacific region because if you think about the greenhouse gas emission of the world, more than 50% is coming from the Asian-Pacific region. Now, that when we try to address this issue, of course, there's a lot of financing is needed, yeah? So I think we have all the numbers, different organizations making assessment with the different assumptions. For example, in our case, we did the study in 2017. For example, Asia-Pacific, developing Asia requires $26 trillion for the investment in infrastructure with the climate sort of incorporated from 2016 to 2030. So that would be about $1.7 trillion a year, yeah? And then also, but this is an estimate done 5 years ago. So the additional investment needs, et cetera, on the transition money and all these things that we're going to talk about I think will be added from there. So I think that basically the bottom line is we need a lot of money. So in that context, for example, organizations like us, ADB, for example, has committed to provide $100 billion for the climate financing from 2019 to 2030. But at the same time, various governments and various other organizations are doing a similar thing. But the bottom line is that whatever the public sector side can bring in to the table is probably not going to be enough at all. I mean, it's a very small part of it. So that means the private sector financing has to come in. Now, in this context, I'm very kind of encouraged in a sense that recently there's a huge interest from the private sector side, both in the business and financier side, about interest in investing and also channeling their money into the projects and activities that benefits the climate and social issues. I think the challenge for us here is basically how to create a system that channel this financing and resources into the sort of the project and activities that would bring benefit on the social and environmental and climate areas. I think we can do a lot of things. I think, of course, the policy and regulatory framework is very, very needed. And then also the capacity building for the institutions to come up with the project that is going to be sort of climate friendly, et cetera, is also important. Of course, the bankable project needs to be developed so that the financiers can have something to invest on. In that context, the innovative financing instruments, et cetera, is going to be one of the very important sort of aspects of it, so that to channel the money. And I think the crux of the matter seems to be that there is a growth sort of the paradigm that when you grow, GHG gas emission grows at the same time.
Yeah.
So we somehow need to sort of change that sort of correlation into we grow but reduce the greenhouse gas emission. And that decoupling is something that is very important, and we have to come up with a system in order for us to do that. And that basically what it means is that business can make basically profits out of doing business in the financial, in doing something good for the sustainability and reduction of greenhouse gas emission, and then also other social agenda that we have. So, so I think your question is basically why is it critical? I think it is very critical, so that the instrument, the innovative instrument, and and the blended finance and all the things we're going to talk about is going to be critical. Just because in order for us to create a system that would pay for the businesses to come in and make investment.
Yeah, but can I have a quick follow-up question, actually, talking about a catalytic financing, particularly with the role that ADB played. To your point, why is it very critical? Do you have an example of a project in ASEAN that ADB actually has stepped in, for example, and make that a viable sort of project to go on?
Well, I mean, the catalytic financing sort of the mechanism that we have been trying to do. I think there's one sort of, you may have heard of the energy transition mechanism, which we started in terms of with the idea that didn't just come from ADB. Actually, it was been discussed in various areas. Basically, to use the concessional financing in order for to making the early retirement and or repurposing of coal-fired power plant bankable, in a sense that because we're bringing in the concessionality and with the blended finance mechanism, that would make it the sponsors and owner to curtail, to shorten the PPA agreement and then reduce and stop the operation earlier than originally planned, but still keeping the net present value of the project intact. So that's something that we're trying to do, and we're working on the pilot transaction right now that would hopefully be able to demonstrate how this can be done and potentially be replicated by others.
Thank you, Pajero. Can I move to Alice? Alice, GFANS is a collective of these financial institutions, global financial institutions, with the focus of accelerating net zero. How do you see ASEAN? And again, actually, within the construct of that ASEAN sustainability, specifically this innovative financing or the financing structure, typically there's a lot of very difficult quote unquote, actually projects that GFANZ has been looking at, but it's actually very impactful to the environment in this case, actually. So how do you see the lay of the land, actually, and what's your perspective about ASEAN in that regard?
Thanks, Tony, and hopefully you can all hear me well. So GFANZ convenes about 650 financial institutions in 50 countries that have each individually committed to net zero by 2050, which is quite a big commitment. It's very difficult to deliver on. And if you're one of those institutions and you're taking this commitment seriously, you are now looking around the globe for financing opportunities that are transition aligned. And from the perspective of the financial system, transition is about the whole economy. So it's not just green and the most obvious kind of climate-friendly solutions, although those are important. But really, to deliver on this commitment, you have to kind of go where the emissions are and try and help corporates to manage them down. So for this region, there's lots of opportunity to attract finance to help solve for hard-to-abate sectors, to help manage high-carbon activities down, and also to finance innovation and solutions that will help support transition and build the businesses of the future. And so what I have observed is that where financial institutions have made these commitments and have started to implement them, and they do that in a number of different ways, by engaging more actively with their clients on transition, by coming up with new products, by setting new KPIs for their senior teams, et cetera, that they are spending a lot more time helping clients and sectors to transition. So I think that offers an opportunity for the region. And I think it means that you can get your, and I hope they don't mind me saying this, but you can get your financial institutions to do some of your work for you to help you get these emissions down. Now, to be clear, it does require quite a bit of innovation, and some of that innovation has started in this region. It requires us to have new definitions of transition finance. It requires us to be better at measuring progress against the targets we're setting. So we need to be able to look at the financing provided and try and attribute decarbonization in the real economy to that finance. And this requires innovation in frameworks and approaches and metrics. Of course, ASEAN has made a big step by adapting the taxonomy approach that we've seen globally to try and capture a wider set of activities. But collectively, we still have a lot to do to be able to measure progress on decarbonization and show that the finance that's being provided to high carbon sectors is making a difference and is moving the dial.
Thanks, Alice. This whole sectoral perspective, I think actually that's something actually that is a good segue. Actually, Rita, if I can turn to you. You know that INA, as the Indonesian Sovereign Wealth Fund, has a significant focus and also a significant key contributor in promoting sustainability and decarbonization in Indonesia and across the region as well. So can you share with us some specific strategies or criteria that you have in your decision-making process and making investment decisions, including green investments? And is there any specific type of project or sector that are more interesting for you to invest in? What are the potential opportunities across the mainstreaming of this sustainable, it's probably more innovative sort of financing in your view, not just Indonesia, but across ASEAN?
Oh, thank you. I hope you can hear me okay. It's always extremely hard to listen while you are waiting to go after the whole full day. INA is Indonesia's first and only sovereign wealth fund, established about 2 years ago. We have a mandate to help Indonesia develop sustainably and at the same time making risk-adjusted returns.
Right.
The way we want to achieve both objectives is to put our money to work, but also at the same time bring other co-investors from everywhere to co-invest with us Now, we have no limitation to invest, whether it is in Indonesia or in the UK or ASEAN or elsewhere. Of course, we will pay attention to those that actually could bring us the impact both to Indonesia as well as on the risk-adjusted returns. We determined that there are 4 different industry verticals that we are focusing on. One is infrastructure, second is healthcare, third is digital, and fourth is energy transition, which is kind of unique because we find that focusing on energy transition and renewables can also make good business sense. So our filter may be different than different investors, but for us, as we focus specifically on green investing, we have done a number of things since we established. We invested in the largest geothermal company in Asia, actually, alongside with one of the biggest renewable companies in the world, partly because Indonesia is blessed with a lot of volcanoes.
Yeah.
And so, you know, aside from the fact that it shakes us a lot, but it also gives us a huge amount of energy from the earth. We also have now signed $1 billion, actually $2 billion electric vehicle fund, and that actually is going to invest in the whole value chain of EV. Number 3, we have announced an energy transition mechanism platform alongside with ADB to try to take out a lot of carbon-powered IPP, because yet again, Indonesia is extremely blessed with a lot of coal. So in so doing, we're trying to make sure that what we invest in really makes a difference through quite a number of innovative financings. We use blended financing, we source the concession financing as well as concession investors. We are partnering with the best in class globally to make sure that whatever we invest brings good things to life, so to speak.
Yeah.
We haven't looked into ASEAN yet, other than Indonesia, because the need in Indonesia is still a lot, and at the same time, we're just new. But I want to put a note that you cannot paint with one brush about ASEAN. You know, an 82,000 income per capita of Singapore is 88 times what Myanmar is at 1,000, or 17 times what Indonesia is making an income per capita. The need in Singapore is different than the need in Malaysia or Thailand or Indonesia. In Indonesia, we still talk a lot about the basic infrastructure need, the transition from coal into renewable energy.
Yeah.
So you got to take into different type of considerations. One thing I can tell you though, most of us drive cars. EV is probably going to be one industry that we can actually cut across all ASEAN. Thailand, for example, is big in automotive. Indonesia is blessed again with a lot of rare earth and natural resources, from nickel to cobalt to bauxite and stuff like that. 770 million market in ASEAN is a great market for electric vehicle. So that's something that I think I'm looking forward to work with the neighboring ASEAN countries to develop the EV, which will help hopefully everybody.
Yeah, thank you, Paddy. I can't agree more with you, actually, that ASEAN consists of very different countries and so on. And I'm sure, actually, the so-called just energy transition means that it's horses for courses. Is every country actually would have a different sort of states of, energy mix, composition, as well as the boundary differences, if you will. By the way, just one follow-up quick question. You talked about balancing between impact, while at the same time returns. How do you do that?
For us, it's an and, not an or. For one thing, if somebody says, could you build the road to nowhere? Or, meaning, build something for the developmental aspect, but the return is not there, we're not going to do it.
Yeah.
But if there is a project that has a 50% IRR and has no development impact, we will not do that even. If you look at every single deals we have done, and we have done over $3.2 billion since we established, every single deal we did have those two components. It has an impact to the development. It also satisfies the economic return criteria.
Thank you, Parida. I think that's very insightful. Let us now turn to the banks, the commercial banks. Actually, we got Justin. Can I turn to you? Now, a lot of similar follow-up questions, actually, to what Parida has said, but perhaps actually, more importantly, slightly introducing a different aspect here. Measuring the impact we talked about and success of green financing could be quite complex. Now, what are the key performance indicators or the KPIs that HSBC utilizes to assess the effectiveness of your green financing initiatives, both in terms of environmental impact and the financial returns? Again, so this is the second part of it, actually, where how do you balance between returns and impact?
Yeah. Thank you for the question, and really appreciate the opportunity to be here. I think, I think I'll probably echo many of the comments that my fellow panelists have mentioned already, but essentially when we set out our ambition to sort of become a net zero bank, but also to lead and finance a net zero transition in the world, and back in October 2020, we were one of the first international banks to do that, and I think it's especially significant, not because that we have a footprint around the world, but we have a very large footprint, particularly in this part of the world, in Asia, and based on our heritage, but also our growth and our opportunity, a lot of it is in this part of the world. And I think it's important to understand that point and for us to actually reflect on what that means, right? I think this is something that has come out, I think, throughout the day at this Indo-Pacific Forum, and I think throughout this week. But ASEAN is about growth. It's about opportunity. It needs to grow, but it also needs to grow sustainably. And that's not only important because of mitigating climate change, of course, but also is to position itself to be successful in a future net zero economy, right? So obviously, if today the economy is exporting primarily fossil fuels, as a big part of what it's doing, but in the future, if most of your customers become net zero or seek to achieve those goals, then it's probably better to reposition your economy towards the products and goods that are necessary to enable that to happen. I think that's a point that has been sort of explained and sort of said probably throughout the day. But I think it's really, the reason I repeat that is because I think it kind of reflects back to us as a commercial bank. What kind of role do we want to play in enabling this to happen? Because this is an economy-wide transition. Banks don't control the economy, but we have an important role to play in this, right? So what that means is actually, I think it's come through in sort of three different ways for us, if you will. First is, obviously, probably the more obvious one is sustainable finance, right? Which is, I think, the main topic of this panel. So how do we ensure that the labeled products that are produced out there, actually, we create a market for it, we create a demand for it, we make sure that it has the right sort of KPIs and everything around it. It's very important in this part of the world because many of our customers are perhaps new to this idea of sustainable finance, whether it's the linked products, some loans or bonds, et cetera, any manner of products. So I think not just us, but I think all the Standard Chartered, or I think other banks in this area as well.
Thank you for mentioning us. No, I'm just joking.
I thought I'd throw it in there for you. But we have a role, in some ways to indicate this to our customers, right? To say, okay, well, this is what it is. This is how you can participate into it, and this is why you should do it, right? And why it's important. The second piece, of course, is I think around. It goes beyond this, and what that is sort of, I think, understanding the technologies and the opportunities that are needed for decarbonization. So often, I think the labeled world covers, sustainable finance. There's numbers around that. It only covers a portion of actually what companies are really doing. I think a lot of financing, a lot of activities, investment takes place without actually calling it specifically or labeling it green, for instance. And I think we need to understand what those technologies are, right? Investments in renewable energy, electric vehicles, copper for grids, which are a critical enabling technology, those sort of things. We need to find the appetite for them. And we need to make sure that we actually support these companies to be successful in the future. So this is another area, I think it's sort of the broader economy area. And the third and the other part, I think that we'll touch upon this on this panel is around partnerships, right? So as I said, as much as we like to say that we have an important role to play, we're only one piece of the puzzle or one piece of the solution towards help enabling a net zero economy. So that means that we need to form partnerships with multilaterals, with investors, with other banks, through various platforms. You know, we've looked at a number of blended finance platforms, whether, you know, Pentagreen is one that we've launched in partnership with Temasek in Singapore, as well as the Asia Development Bank. We looked at we're a participant in the Just Energy Transition Partnerships, which again is a blended finance partnership, which sort of seeks to help accelerate and enable a just transition. And I think, I say the just part by meaning that actually, you know, it is meant to also help in an economy prepare itself in a net zero world. So I think these partnerships are also very, very important. And I know the question was about KPIs, but really I think if you add all these things together, and if we are making progress on them, then we can say, okay, we are making progress, right? This is one way to measure, you know, how to go forward.
I can't agree more with you on the collaboration point. And of course, we'll talk more about the Just Energy Transition Partnership, because that's probably one of the most sort of complex, but again, actually is the umbrella for that blended finance for us. But before that, let's move on. We keep talking about that environmental impact. We should talk about sustainability. It's wider than that, on the social part of things as well. Kunadawan, as representing the only indigenous ASEAN bank, you know that Bangkok Bank actually, you know, you're expanding rapidly across the region as well. And of course, you're one of the largest banks in Thailand. Can you share with us, in terms of role that Bangkok Bank has played in helping the micro and SME segments? Typically, in any country, they face barriers in accessing capital. How do you tailor your financial solutions and mechanisms to support the growth and address the unique challenges actually faced by this particular segment? And if you have any examples, that would be fantastic.
Thank you very much. Can you hear me? Yes, thank you very much for having Bangkok Bank at this panel. So as a regional operator, Bangkok Bank operate in 14 economies, and 12 of which is Asia/ASEAN. And a very famous question is that how do SME face the challenge, and how do banks, you know, typically helping them to access capital? First of all, Thailand, which is our home-based country, we have no issues about liquidity. We have massive liquidity, and most of which large local corporate have strong access to liquidity, whether it's loan or bonds. So it's over bank, basically, right? However, when it comes to smaller or retail or even SME lending, it's more of an issue on the credit rather than accessing for the sake of accessing. So I think database has become one of the important element which will assist any lenders going forward to being able to making a more speedy decision making and be more comfortable in lending to those SME. Now, as a bank, other than being just a lender, we also acted as we can be a guarantor. We can also act as an underwriter. We can also act as actually providing education to the SME, which if you look at carefully, these SME, they also need to transform themselves and catching the wave that is coming in the near future, that everyone have to be compliant to ESG. And therefore, educating them, helping them to transform, whether it's directly helping them directly or indirectly by, say, helping the large corporate. And then the large corporate then be able to extend more help and support to them is another fold. And also accessing to technology is another challenge. So in terms of tailoring the product which we have, for instance, in Thailand, we have green loans, which we develop a product program which will help these SME to able to accessing the cheap funding, say, 2%
So this
loan.
is sustainable loans
Yeah.
for SMEs.
Yes, for SME, particularly focusing on the smaller SME, not for large corporate. But okay, we do not prejudice against large corporate, but large corporate normally have their own internal cash flow enough to sort of like upgrade to the renewable energy. But for SME, if they wish to upgrade, say, some project renewable related to green or to save energy, to actually transform into a new technology, we do have that special loan, which is a very attractive low rate, and the process would be very speedy. However, having said that, even though we do have, but if you look at the amount, the growth rate from 21 to 22 grow by 600% or 6 times, but the base is very, very tiny.
Sure.
Very, very small. Vis-a-vis the loan itself, the bank has been granting renewable loan maybe like 4 or 5 billion, which is not specified, not call it, not name it, just like what you said. We haven't named it, but we've been lending to this project as well. So this type of product, we originated and we developed product program. Aside from that, we also work with the Thai Guarantee Credit Corporation to also develop another product program for these SME to be able to access to liquidity or rehabilitation on their business post-COVID. And on another side, from the capital market, we also indirectly, for instance, help the underwrite the Ministry of Finance, which is the sustainable bond. And the use of proceeds was to help the rehabilitation of these SMEs or smaller, less fortunate companies or families to access to this funding.
Thank you, Kunarawan. Can I just have a follow-up question? Interesting program that you have with Bangkok Bank, because it's actually a loan for SMEs. Low interest rates, you mentioned. How do you do the risking? Since our session talks about innovative financing, maybe this is something you could share with the audience, with every one of us as well, actually. How do you keep the rates low? How do you do the risking mechanism for that? I understand you may be working with other institutions like the Thai, development guarantee sort of companies, but how exactly are you doing that?
It's actually partly governmental support, but please understand that the denominator is very small, right? I mean, the size is like maybe limited to 2 million baht, in terms of the maximum and minimum.
True, but one I would think that the risk is also high.
We're not talking about huge, large size and all that. And that's why I said the opportunity to work again, maybe as a structurer to continue to develop this type of example would then encourage everyone in the country and the region to follow this type of financing, but again, with the support of the regulator.
Thank you, Kunarawan. Now, let's move on to this. We talked about, the types of blended finance, those types of things actually that are already happening in ASEAN. Can I go back to Pak Jiro? So how do we ensure that ASEAN and the generally Indo-Pacific region attract the needed investment in energy transition? And what types of financing should the region be looking to attract? And can I attach JETP here? Because it's one of the great examples of that endeavor to come up actually with umbrella blended financing covering, almost everybody, philanthropy, the concessional loan providers and the commercial bank sector. But what do you think about this? How do you see the importance and the progress?
Thank Thank you very much for a very, I think, important question, and that's sort of the policy and then practical sort of challenges that many of us are actually trying to. Of course, there are different things, and many things have to happen probably at the same time. Policy and regulatory framework is also going to be important. One of the very interesting attempts that Indonesia is also leading is on the taxonomy issue, the transition finance taxonomy. That would hopefully, and then, incentivize more sort of private sector financing to come in for the transition part of it, not the clear green sort of renewable energy part, but something that innovative one. For example, what we're trying to do in energy transition mechanism is about the early retirement or repurposing of coal-fired power plants. That investment in this coal-fired power plant with traditional sort of taxonomy, it could be considered as financing for the coal and fossil fuel, which for some banks, it is not something that they would be enticed to do, right? So by changing the taxonomy, if they would allow that to be part of considered as sort of a green project, then we would be able to bring in more financing into that part of thing. The other thing is also, I mean, for us is important is that I mentioned a little bit earlier, it's about the demonstration part of it. And then that's exactly what we are trying to do with the transaction that we are pursuing right now for early coal retirement in the power plant called Cirebon in West Java, 660 megawatt coal-fired power plant. I think the challenge is that it is, because it is innovative, in a sense it is new. So and then, I mean, all the challenges that we need to go through to start something new is there. I mean, it's about the financial, it is about the, environment and social due diligence, it is about, regulatory sort of issues and government processes, etc. But I think in a way that organization like us, the Asian Development Bank, is really sort of well situated to do that kind of initial pilot project so that we can show that this kind of structure could work, and then also give some lessons that can be replicated later. Of course, this whatever the structure that's going to come up through this effort is not going to be the sort of the rules that everybody should follow, because the transaction by transaction, they all have the unique sort of the features of it, so that the structuring will be different by transaction. But anyway, at least it could hopefully show that this kind of using the blended finance, try to reduce the sort of the operating period of coal-fired power plants, so the reduced period, the greenhouse gas emission will be reduced using the blended finance, and and that could be possible if we can show that and demonstrate that. I think that would be sort of de-risking sort of the impact it might have for others to come in.
I must say it's highly commendable what the ADB has embarked upon on this early retirement of coal-fired power plants, because we know across emerging markets, particularly in Indonesia, that is so critical and probably one of the most difficult tasks to undertake. I can tell you, it's definitely a lot easier than financing a renewable energy project. But that is so critical in order to help any country, emerging markets, which is dependent on coal-fired power plant, to accelerate the net zero. So that's really great. And I know ADB is working very closely with INA on that early retirement of the Cirebon example that you mentioned. So I wanted to invite Parida. Do you want to share a few perspectives actually on that? I mean, that's a pioneering work. It's work in progress, we know, but it's probably going to be, as and when actually you solve that one, actually that's going to be one of the crown jewel of innovative financing ever, at least actually for now.
Yeah, thank you. For those of you here in the audience, there are about maybe up close to 80 gigawatt of energy installed power in Indonesia. About over 67% are actually coal powered. Um, Partly because coal is the cheapest source of energy. Now, to retire coal, it's not easy because the renewable energy cost is not that cheap.
Yeah.
So what we have done with ADB is to try to find the coal-powered IPP owners that are willing to sell their IPP to us and our consortium, funded by ADB. And because we have a superior cost of capital, we have some profits or arbitrage, and that profit is being used to shorten the life of that IPP. And in so doing, it'll make the coal power plant retire early so that we can replace them with renewable energy.
Right.
That, in a nutshell, is what we're trying to do with ADB. We have been working with the sponsor and our co-investors. We are hoping to sign the CSPA subject to the acceptance of PLN, which is the state-owned electric company, in terms of the PPA, hopefully before the end of this year. Now imagine if that happens, that sort of blended financing type could become the blueprint of retiring coals, economically speaking, without asking for government support or discount from any type of owners. But it's not easy. It's very, very hard, and it's something that we are working extremely hard together to do.
Yeah. And I think all eyes are on Indonesia, and specifically that INA and ADB partnership in paving the way for that pilot, and we wish you all the very best. But can I turn to Alice? I think the very reason you are here in Jakarta this time around is for this conference, as well as actually for the continuation of the JETP. So where are we now? How do you see that actually for Indonesia and Vietnam?
Thanks very much, Donnie. So I think the JETPs are starting to have the desired effect, which is by bringing together government with high ambition to transition, alongside donors, alongside MBBs, DFIs, and private finance. You can take a systems-based approach to energy transition and think hard about where to direct the public capital, where to get the private capital in. And then that supports some of these new structures we're talking about. So as mentioned already by some on the panel, you know, it's of course easier for everyone to sort of gravitate to the renewables end of the spectrum and finance those, but we can't get to net zero in Indonesia or Vietnam or wherever that way. So we have to take more of a systems-based approach, and I think the benefits of the JETP have been that we work to improve the kind of investment appetite and the project pipeline, and it takes time, of course, we're not there yet, but you know, we're moving in the right direction to build up the sort of renewables project pipeline and ideally get those, you know, commercially financed. But then we direct the public money in a very smart way to where we need it to bring the cost of capital down. One example was mentioned there of managed phase out, which of course is going to need public capital to make the economics add up. But we can also bring in private finance, and that's the shared intention, I think, to help stretch the public finance further. And that's pretty new as well for private finance. So, you know, we're all doing something new in this space to try and help solve for early phase out. And also grid. So we know that in Indonesia, we'll really need to invest in grid, particularly in regions, and the cost of that is going to be kind of compressed over a relatively short time frame. I think we're also going to need to look at some new kind of financing structures there that help bring, again, public and private finance together and try and scale those projects. All of this, both the phase out and the grid investment, will make more space for renewables, which is obviously important for getting emissions down.
Thanks, Alice. We've got a few minutes left, but Justin, any further as the bank actually that is an active part of GFANS across all of this, whether it's JETP, whether it's other sort of innovative financing, if you will. I mean, you have any further comments to add on that?
I mean, Absolutely, right? I think just to echo, I think maybe sometimes innovation is a term for difficult or challenging, right? I think the first one is always difficult, and of course, I can say from private finance perspective, we're very interested, more than interested actually, to participate in both these platforms such as JETPs, and sort of as you say, Alice, how do we leverage public finance to actually unlock more private finance, right? How do we sort of show the way that such a transaction such as a coal phase-out, a managed coal phase-out, I should say, can happen, and it can happen economically viable. And I think the reason of picking Indonesia is not to sort of just pick on Indonesia, but I think it's a very, it has a number of interesting factors that come together. One of which actually is that renewable energy is probably more challenging to build in Indonesia for a variety of reasons. Than in other parts of the world where actually costs have come down and it's sort of not considered a risky type of investment. But here it is still a bit more challenging. So if we can find a way to sort of pave the way for a managed coal phase out and also to scale up renewable energy and also enabling technologies such as grid, if we can do it here in Indonesia, then I think this model, one is that we can unlock more here, and then we can sort of see how we can apply this model in other parts of the world, particularly other emerging markets as well. So yeah, I think it's just a wholeheartedly yes that we have appetite to do a lot more of this, and I think it is I think this panel is an embodiment of the partnership that's needed to get this done.
Exactly right. And I know we're out of time, but last question, Kun Narawan. How would you advise businesses who are here in the audience in order to attract more capital that is needed for them? I mean, any tips and tricks? I mean, as Bangkok Bank, actually, you deal with MSMEs, of course, the large corporates. So any quick one, actually. Tips for the companies here to ensure that they can attract the right capital while making positive impact to the environment.
Yes, thank you for the last question. I think the key success to what we've seen in the Thai, for instance, the Thai capital market has been developed very, very positively in terms of the ESG financing in the past, only over the past few years, and whereby you see that the local banks, not only the Bangkok Bank, but generally local bank has become the successful intermediary bridging between the investors and those who are the borrower. And we played a significant role in educating issuer as well as investors, all the way from institutional investors all the way down to retail investors, because the most recent sustainable bond that has been issuing in Thailand, although the size is like quite small for last year, has been about, I would say about $5 billion equivalent, half of which was issued by the Ministry of Finance, which I mentioned to fund the post-COVID rehabilitation. Another half was only issued by 5 companies, but all of those 5 companies varied from transportation, petchem, agriculture, auto, EV, you name it, right? So the successful story is that we can link between institutional investors / retail investor all the way up to the borrower. And therefore, this has been quite a success story in Thailand, and I think this may be a more meaningful and useful for other countries in ASEAN to follow the footsteps in developing this model.
Thank you. Good, Narawan. And with that, actually, we have to wrap up. Thank you to all the distinguished panelists and speakers actually here, and to all of you for attending this. And we hope you got the insights, and thank you. We'll talk again. Thank you.